Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Monday, the 31st of January. Starting off with Aminex, where we're making, I suppose, good consolidation and progress at the same time, holding above that top of the trend channel there from March last year, around 105, above the 1 penny area, looking for 1.5 over the next 6 to 8 weeks, hopefully sooner than that, especially while we remain above the 1 penny level. Moving along to a stock which I haven't covered for quite a while, and I suppose it's because it's a rather thin day at the moment. It gets a mention. Here we've got Altin, which has gapped up through the triangle that's been in place since May, and the 50-day moving average. That's looking pretty good. Above the resistance line there, broken from May at 121. We're looking to hopefully retest at least the 140 to 150 area, which is post-September resistance. Only back below the gap there at 116, really delaying the upside scenario, but looks as though the shares, after that bear trap gap reversal at the beginning of the month, are on their way. Moving along to another stock which doesn't get much airtime, but is here today on a quiet day. We've got Active Energy, and looking interesting just on the basis of this bullish divergence line that's been in place since December, giving the shares some push in terms of the upside. Obviously, if you're cautious, you maybe want to wait for an end-of-day close above the 50-day moving average, but obviously that would give away the upside, so you've got to assume that the bullish divergence will get the shares up to that area, 0.24, 0.25. At least while there's no new low below 0.15. The bullish divergence line obviously not great if you have a very strongly downtrending stock. So we did see early limited upside there in October, November with that bullish divergence line, but maybe it's second time lucky for the bulls. Onto a stock which is in a rather better technical state, maybe even fundamental state. We've got Audio Boom here. Blink and you missed it. Test of the 50-day moving average, rising 50-day moving average around £12.50. And above that, we're looking for not only a break of recent resistance at £16 plus, but also big picture target maybe over the next 1 to 2 months as high as £24, which is the top of that broadening triangle there from this time last year. So looking pretty well set there for Audio Boom at the moment, especially while we're above the £14 area, but ideally, obviously, the stop loss there, £12.50 for that situation. Long bullish divergence line there from August, so the trend looks to be fairly well, firmly entrenched. And as you can see, the latest support there for the shares was actually well above old resistance. Old resistance around 1150, the new resistance 1250. When you have a gap between the old support, old resistance and new support, that is an extra bullish factor for a stock or market. Speaking of old resistance and new support, we've got Global Petroleum, where here the old breakout level at 0.7 has been tested as a new support. Rather unfortunate, perhaps, that it had to retrace that far back to retest that, but that can happen and very often does. So above 0.7, we're looking for a retest of the best levels of the other week at 103. And the target that we've been chasing since the 0.7 breakout, the initial one, was up to 1.3, which may be seen by over the next 6 to 8 weeks, something like that, and hopefully a bit sooner. Stock which where maybe angels might fear to tread after the recent history is Polarian, but looks like we're breaking that line of resistance from October. After the bear trap below December support, that was around 54 so we went down to 51 just to shake out the last of the weak hands. We've got a bullish divergence line there as well, which is helpful. So an end-of-day close above 60 pence should or could be enough to get the shares back up to the mid to low 70s over the next month or so, something like that. New CEO at Powerhouse Energy, and interesting charting situation in the sense that you can see that the shares have worked quite well in terms of breaking near-term resistance lines. So that worked in August, it worked in October, November, and hopefully now with a break of 3.9 pence on an end-of-day close basis, we'll at least get up to around 4.5, which is the 200-day moving average. Looks like we've got pretty good support there, around 3.6 pence. That's post October support, in fact post-August support, apart from one day when we just blipped through that level. The other point to note is the RSI window, where we've got a break of that RSI resistance line from November around the 45 level. Anything on in terms of 50 plus, maybe the neutral level there, an added bullish kicker for Powerhouse in the near term. The Aquis market, famous for its liquidity at the moment, probably as much liquidity as the Gobi Desert at the moment. But here we have, we're going to have a couple of stocks from Aquis which are actually moving and look like decent situations. First one is Quetzal, where we broke a line of resistance from March back at the end of December. That was around the 4.6 pence area. Since then, we've had a sideways shuffle well, in fact, above the 50-day moving average, which is rising, which is a plus. Also got a bullish divergence line, which was the reason for the call, or the bullish call in December, around 3.5 pence. That sort of worked so far. And the view now is that probably a break of the resistance line I'm just about to draw should get the shares on the move. So 4.9 plus on an end of day close basis should be enough to get the shares back to the 7p, 8p post-June resistance area that perhaps peep holders of the stock have been waiting for quite a while. More liquid situation, one might suggest, is tertiary minerals, which I covered last week. Here we've had a bullish divergence line, which was flagging the way that the shares could be ready to break higher when they were around 0.18, 0.19. Decent close on Friday, and then breaking above that resistance line today from June at 0.21, above 0.21, looking for, I suppose, up towards the 0.3 area, which is post-September resistance as a minimum on the upside over the next 2 to 4 weeks, or maybe even sooner. At this stage, only really well below 0.18, and the 50-day line really delaying the upside scenario for tertiary. Another stock from Aquis, which I suppose somebody has to cover these, Valerium, which had, I think, good news at the close, well, near the close of play on Friday. Here we're in a symmetrical triangle that's been in place for, I suppose, most of the last year. Hoping for fourth time lucky, breaking that line of resistance from June. That's at 44 pence, so an end of day close through 44 should at least give us a retest of October resistance at 60 pence. Would be surprising now if there was any weakness anywhere below the 30 pence level, and a long bullish divergence line there from last February, so that should hopefully continue to give the shares further momentum. I can't believe actually that we'll have any more tests of the 30 pence area. I think we've done enough of those over the recent past. Finishing off with Expediator, which I've covered a few times before. Here we're breaking a line of resistance. I suppose you could say the line there is at the 53 pence level, so an end of day close through 53 should be enough to give us at least a retest of November resistance at 63. Added momentum provided by that bullish divergence line there from the end of October, and the gap through that line of resistance, which should be should be a comfort to those looking for the shares to head higher and continue to head higher. So low 60s initially, and then maybe into the low 70s after that by the end of March, something around that time frame. Earlier back below 48 pence now, delaying the upside scenario. That's it from me today. More updates tomorrow.